This is chasing wisdom. Real life, real money, real faith. I came up with a prayer and a plan. Kept my name on the line. This is chasing wisdom.
Real life,
Real money.
real faith.
I've been counting every step. Now I'm pressing through the noise. Hands up when the truth hit. I was built for this choice. This is chasing wisdom.
Real life,
Real money, real faith. Fade it out, then cut it clean. Chasing wisdom.
What up, what up, what up? How y'all doing? My name is Rodney Lorston, and this is Chasing Wisdom Podcast. We gonna talk about credit, you know what I'm saying, finances, God, you know what I'm saying, life. This podcast is just to help you understand and get a good grasp on some wisdom in the gems that I accumulate. You know what I'm saying? This is Chasing Wisdom Podcast. Make sure if you come across it, like, share, follow, subscribe. You know, check out my Amazon. Search on Amazon Credit Repair Playbook. You know what I'm saying? Check out my TikTok King Row Banks. You know what I'm saying? Yeah, man, just support the movement. You know what I'm saying? Support the movement, but this right here, this me. You know what I'm saying? I'm feeling comfortable in it. I'm loving it. Like, I feel like I found what I want. I found what I want to do. I want to podcast it. I want to drop the knowledge. You know, I want to give it to the world. I want to give the game that I'm soaking up to the world. You know what I'm saying? So without further ado, we're going to get right into it. You know what I'm saying? Today's topic is business credit and how to build a fundable business profile to get approved for higher limits. You know what I'm saying? So we're going to get right into it. You know what I'm saying? I got my notes. I like to tell people what's going on so they don't feel like it's cheating or nothing. But yeah, I got my own notes. I got everything. And I'm gonna give it to you because I take my notes and this is my game. These are the gems I got, and I'm gonna give it to you. You know what I'm saying? So understand, this is me giving you what I got wrote down, what I got documented, saved. You know what I'm saying? This is the game. This is what I learned. This is what I'm finna give you. You know. So today we just gonna talk about building a business profile to get approved for higher limits. You know, understand how lenders actually think. So to even get these limits and get into this and get this money, to get this bad, you know what I'm saying? We want to get the bad. If you really want to get the bad, you got to understand how lenders think and what they looking for, you know? So let's look at it through the lens of the lender. When a lender reviews a credit application, they are performing a risk assessment. They want evidence that you can and will repay what you borrow. Most applicants focus only on the credit score, but underwriters also examine income, stability, business legitimacy, cash flow patterns, and consistency in supporting documents. Understand this multi-factor evaluation is the first step to positioning yourself as a low-risk, high-approval candidate. Lenders use what is called a 5 C's of credit: character, capacity, capital, collateral, and conditions. Mastering how each of these steps applies to your business profile will transform how you approach each funding application. Lenders evaluate 5 dimensions of credit worthiness. Understand all 5 lets you strategically strengthen your application before you ever submit it. So you have to understand all 5 of these. If you want to get this funding and this is what you want, you got to look at it through the eyes of the lender. Get your profile in order. So first, let's talk about this, because these are totally different things, but they can work hand in hand. Your personal credit versus business credit. Know the difference. Personal credit and business credit are 2 entirely separate financial systems, each with their own reporting bureaus, credit score models, and approval criteria. Personal credit is reported through Equifax, Experian, TransUnion, and uses a FICO score ranging from 300 to 850. Business credit is tracked by Dun Bradstreet, Experian Business, and Equifax Business, and use different scales such as the pay debt score, ranging from 0 to 100. From Dun Bradstreet, many business owners unknowingly operate only within the personal credit system, which limits funding amounts and tiers personal liability to the business debt. Building a robust business credit profile allows you to access significantly larger credit limits without putting your personal assets at risk. Business credit and personal credit are separate systems. Building both strategically unlocks far greater funding capacity than relying on personal credit alone. Let me say that again. Business credit and personal credit are separate systems. Building both strategically unlocks far greater funding capacity than relying on personal credit alone. So understand, they 2 different things. They seem the same, but they quite different. But I'm going to get into it at the end, because they do go hand in hand. The fundability framework: building a business that lenders trust. So the fundability refers to the overall attractiveness of your business as a lending candidate, and it goes far beyond just credit scores. A truly fundable business has a consistent identity across all public records. So understand, this is big when you start your business. When you start your business, the public records have to have all the same legal name, address, phone number, and EIN number appearing on every document, directory, and application. Lenders in their automated underwriting systems cross-reference your business information against databases like LexisNexis, Secretary of State filings, and 411 business directories. Inconsistencies, even minor ones like an abrasive business name, can trigger red flags and automatically deny your business funding. Establishing what credit professionals call a business credit foundation means ensuring your entity is properly registered and has dedicated business phone number, professional website, and a business bank account with consistent activity. And that's why you hear people saying, "Oh, run your money through your business account." Don't do that. It's good advice, but it's bad advice because you're going to be taxed twice, you know what I'm saying, on that money, and that's your personal money. So if you ain't profiting in that business, you can cause yourself some problems, you know what I'm saying? But you got to have some activity going on in that bank account. Fundability is about consistency. Your business name, your address, your phone number, your EIN, all of these must match perfectly across every record, application, and directory. So it's important when you go to register your business and you building your business website and all these things, make sure everything stays consistent. If you change address on your business, update the records in the system, update the records with the state, because the lenders are going to look and cross-reference all of this. And if anything out of whack, it's going to trigger a red flag and you may be denied, you know. So let's talk about it. Your income documents. What it is, why it matters, and how to do it right. Why income documentation is the make or break factor in credit approvals. Income documentation serves as a primary evidence of repayment capacity. The capacity, remember that capacity, factor from the 5 C's, and is one of the most scrutinized elements in the credit application. For employees, this discrimination typically takes the form of pay stubs, W-2s, and tax returns. For self-employed individuals and business owners, acceptable forms include profit and loss statements, business bank statements, 1099 forms, and sometimes Schedule C filings from personal tax records. Lenders use income documentation to calculate your debt to income ratio, which compares your total monthly debt obligations to your gross monthly income. Most lenders prefer a debt to income below 43%, and some premium credit products require it to be below 35%. Understanding what documentation is and required and how it will be analyzed help you prepare a compelling and complete application package. Your income documentation tells lenders whether you can repay. Prepare it carefully so it tells a clear, consistent, and compelling story. So your income documentation is the key to your funding. You want it to tell the right story. So make sure that documentation is in order. Make sure it's right now. Now, let's get into the types of income documentation and when to use each. Different lenders accept different forms of income documentation, and knowing which type strengthens your application is a key strategic advantage. Pay stubs are the most universally accepted for W-2 employees, and most show gross pay, net pay, and year-to-date earnings, employer information, and pay period dates. For self-employed applicants, professionally prepared profit and loss statements covering the most recent 12 to 24 months is often required, and some lenders require it to be CPA prepared or notarized. Business bank statements, typically the most recent 3 to 6 months, are increasingly accepted by alternative lenders and fintech credit products as they reflect real cash flow rather than report income. 1099 contractors can supplement with their 1099 forms and corresponding bank deposits to demonstrate consistent earning patterns. The golden rule is always to provide the most recent, most complete documentation available and to ensure all figures are internally consistent. So make sure you match your income documentation type to the lender requirements and always ensure every document you provide is internally consistent with all the others. So don't have your numbers looking crazy and not matching, because they're gonna they're gonna match it up. They're gonna confirm it. They're gonna look at it. And whatever type of whatever, however you trying to make your money, however you make it, is determining what documents you need. So if you're an employee, you work for a company, your pay stubs, your W-2s, your tax return. If you're a 1099 independent contractor or business owner, your debt to income ratio, your business bank statement, or your 1099 tax form. But it got to be consistent. So these got to match with what's going on. All right. Now, y'all ready for the game? I'm going to give y'all the game. Creating accurate pay stubs as a self-employed business owner. You hear that? Creating accurate pay stubs as a self-employed business owner. Self-employed individuals and business owners who pay themselves can legitimately generate pay stubs. Let me say that again. Self-employed individuals and business owners who pay themselves can legitimately generate pay stubs through payroll software as a documentation of their own compensation from the business. So you can make your own pay stub. But you have to be self-employed, or you have to I'm so excited, I can't lie. You have to own a business. Let me get back into it. I'm sorry, y'all, because that's it's game, but you gotta catch the gym. You know what I'm saying? It's I'm giving y'all something. I'm trying to draw the energy to it. Self-employed individuals or business owners can legitimately generate their own pay stubs. Legitimately, you can create your own pay stub. This is one of the documents you need to get funding. You do this through your payroll software as documentation of your own compensation from the business. This is a standard in legal practice when you are a properly structured business entity, such as an S Corp, C Corp, or LLC, taxed as an S Corp, and are running payroll through platforms like Gusto, ADP, QuickBooks Payroll, or Paychecks. The pay stub must reflect the actual compensation being paid, reported to the IRS, and consistent with the business bank records and tax filings. It is critically important to understand that fabricating income you have not actually earned or reported is fraud, which carries severe legal financial penalties, and legitimate paths to structure your business properly, pay yourself a reasonable salary through payroll, and document that process accurately. So, you self-employed owners can legitimately generate pay stubs by structuring your business properly and running real payroll. There's no shortcuts that don't carry serious legal risks. But understand that, Jim, that you can make your own pay stubs. You can make your own pay stub, man. Get in the program, you know what I'm saying? sauce it up. You know what I'm saying? I'm gonna leave it at that. I ain't gonna say too much. Organizing your income documentation package for maximum impact. A complete income documentation package is more persuasive than any single document on its own. In presenting it in a professional, organized manner, signals to lenders that you are a sophisticated, low-risk borrower. A strong package for self-employed applicants typically includes 3 to 6 months of business bank statements, a current profit and loss statement, year-to-date and prior year, the most recent 2 years of tax returns, personal and business, any applicable 1099 forms or payroll records, in a one-page executive summary of your business financials. Present these documents in a consistent PDF package, labeled clearly with dates and document types. Many successful funding applicants create what professionals call a credit portfolio, a well-organized financial dossier they can quickly customize and submit to any lender. Having this package ready before you apply dramatically reduces approval timelines and prevents the back and forth of document requests that can cause deals to fall apart. So remember to organize your income documentation into a professional package before you ever apply. Preparedness signals credibility and dramatically speeds up the approval process. You know what I'm saying? Remember that. Organize your documents. Have them ready. Structuring your business for credit approval success. So choose the right business entity for credit and funding. The legal structure of your business significantly impacts your credibility and access to credit. Protect personal assets and presents a professional profile to lenders. Sole proprietors offer the simplest setup but provide no separation between personal and business credit and no liability protection. LLCs offer limited protection and flexibility but must be properly maintained, including separate bank accounts, registered agents, and insured filings. To be taken seriously by lenders, S corps and C corps are typically viewed as the most fundable entities because they have strict structural requirements that demonstrate business legitimacy. For credit purposes, a LLC taxed as an S corp often provides the best of both worlds: liability protection, pass-through taxation, and ability to run payroll in a fundable corporation structure. Consult with a business attorney or CPA before selecting to change your entity type. You know, your business entity type is a fundability signal. Structuring properly as a LLC taxed as an S corp often unlocks significantly better credit access. So if you structure it properly, your LLC can be taxed as an S corp and unlock some more credit for you. Catch that gem. I'm dropping them. Setting up your core business infrastructure. Lenders verify. Beyond the legal entity, lenders verify your core setup of business infrastructure elements before approving high limit credit. First, you must have a dedicated business checking account at the recognized financial institution, and it should have been open for a minimum of 90 days with consistent documented deposit activity. Second, you need to have a dedicated business phone number, a toll-free local number listed under the business name in directory assistance, 411, because many lenders verify phone listings as part of their due diligence. Third, in professional business website, your business name, service, address, contract information, anything like that is increasingly in standard verification process step. So make sure you got all that in order. You know what I'm saying? You got to have your business bank account that got to be open for more than 90 days. You got to have deposits running through there that they can confirm. After that, you gotta have your business name in the directories. You know what I'm saying? You gotta have all that. Your business phone number can't be your personal phone number. You gotta set this up right. You gotta get your own business number that can go to 411. You know what I'm saying? Toll free or local number, but it gotta be listed in the business name. And third, you gotta have a business website with all your services on it, your address matching everything, your phone number, you know what I'm saying? All your information gotta be looking professional, legit. And fourth, a business email address. Matching your domain, not a Gmail or Yahoo address, a business email address. Add professional credibility. Finally, your business address should be a physical address, not a P.O. box. A virtual office addresses from providers like Riggers and WeWork is acceptable for most lenders. Now, today in 2026, they cracking down on that. They updated some of the laws. The virtual is no longer acceptable. You know, they catching on to that virtual. So your best move is to get you rent you somewhere in one of these cheaper states, you know what I'm saying, and register your LLC and go ahead and start your business with that address, you know. But the virtual is going out, you know, they catching on and you can't do it no more. But yeah. Your business infrastructure, your bank account, your phone listing, your website, your email, and your address must be verifiable and consistent before you apply for any significant credit. So make sure you get all this in order before you start applying for these funds, because if anything is out of whack, it's gonna throw the red flag and they're gonna tell you no. You know. Nah. Build your business credit profile from scratch. Building a business credit profile is a systematic process that begins with establishing your unique business identifier and progress through tiers of increasingly large credit accounts. Step one is obtaining a Duns and Bradstreet number. You know, this is a free account. It serves as your business credit identity. Step two is to open accounts with starter vendors, companies that report to business credit bureaus and extend net 30, net 60 accounts without requiring an established credit history. Classic starter vendors include Uline, Quill, Granger, and Crown. Office supplies. Excuse me. Step three is to pay those vendors' accounts early or on time consistently, which builds your payday score rapidly. Step four is to apply for business credit cards from issuers that report to business credit bureaus, such as American Express, Capital One, or Bank of America business cards. Step five is to establish a relationship with your business bank and eventually apply for a business line of credit after 12 to 24 months of solid history. So that's what I was saying in the last video. I'm gonna break it down for you. You get your business, you get your Duns and Bradstreet number. You know what I'm saying? They call it a Duns number for short. Um, you take that number because that number is going to be your business credit account number, basically. You know you got your EIN. That's for tax purposes on your business, but then you want your business credit number, which is your Duns number. You know, and so you take that. That's like your business social security number. You take that number there and you start getting net 30s and net 60s credit card accounts. These are just basic store credit cards, you know what I'm saying? The basic store credit cards, gas cards, simple stuff. You get these, you use them, you pay them, you use them, you pay them, you use them, you pay them. You want to do this for at least 90 days. Once you do this for 90 days, you go to your business bank and you start trying to get, you know what I'm saying, because your number went up, your business credit went up by them cards. Now you try to get more funding or business capital from your bank. Now that they see that you got history, they're more willing to give it to you. And you take that and you establish that relationship with your bank, and you just make sure you do right, pay that stuff back if you use it, and you just keep building that relationship so that you can access the capital you're trying to get to. I kind of jumped ahead, but that's the sauce for that right there. So, applying for high limit credit, strategy, timing, and execution. So it's all about strategy, timing, and execution. So the credit application strategy, sequencing, timing, and stacking. Apply for credit without a strategy is one of the most expensive mistakes business owners make, because each hard inquiry can temporarily lower your credit score, and too many applications in a short period signals desperation to lenders. The concept of credit stacking involves strategically applying to multiple lenders during a compressed time window, typically 14 to 30 days, during which the credit bureaus bundle the multiple hard inquiries as a single event for scoring purposes. Before applying, your personal credit should be optimized. Pay down revolving balances to below 30% utilization. Remove any inaccurate negative items through your dispute process and ensure all accounts are current. Business credit applications should be sequenced from the lowest limit. Easiest approval products first. Build a payment history that supports the application for larger limits. Timing and applications around your strongest financial quarters, when bank deposits and income documentation reflect peak performance. Also improves approvals odds. So make sure you apply for credit strategically. Time your applications, stack them within a 30-day window, and sequence them from smaller approvals to large ones to build more momentum. So start with the smallest product, the smallest credit amount, and work your way up, which is why you start with the net 30s and the net 60s before you go for that big funding, and you establish yourself, you establish your business. Now, your personal credit and your business credit are two different things, but like I say, they work hand in hand, because when you start off and your business credit ain't that big or it's brand new and fresh, if your personal credit is optimized and it's good, you can personal guarantee your business credit, and they'll look at your personal and see what's going on and can get you approved for the business side, but it won't affect your personal, but they'll go based off that, what I'm saying, your personal credit score and personal history. So they're two different things, but like I say, they work hand in hand. You leverage them. All right. After that, what you want to do? Write a compelling credit application. What to say and how to say it. The narrative of data you present in a credit application should tell a coherent, confident, and accurate story about your business, financial health, and future trajectory. When asked about your annual revenue or monthly income, use your most recent 12-month figures and be prepared to substantiate every number with documentation. So be prepared to back it up, with documentation. For the purpose of the loan field, be specific and business focused. Working capital for inventory expansion or equipment purchase to support a signed contract are far more compelling than business expenses. If an application has a business description, use professional language that conveys stability, experience, and marketing position. Always apply for an amount you can realistically support with your documentation. Requesting 10 times your stated income is an immediate red flag. Aim for credit amounts that are represented 2 to 3 times your monthly gross revenue and starting benchmark for high limit products. So don't try to get 10 times of what your business is making. Aim for what's right there. Aim and be specific when they ask you what this is for. Don't say business expenses. Be specific as possible. Expansion, equipment purchase. Be specific. Working capital. Stuff like that. This is the trick to get approved for these high limits. It's a step-by-step process. You got to start it off small. That's why I'm going to iterate this. You know, start off small with the net 30 accounts. Get your Dun Bradstreet first. Get the net 30 accounts. Manage them well. Make sure your personal is already in line and good, optimized. So when you go for this bigger funding, you still have to work your way up. Now that you got these net 30s and you done built some business credit, now go to your business bank and apply for the business credit card, and personal guaranteed with your personal credit. But you also got your business credit. So they looking at both of these, and they're gonna be like, okay, I think you can pay this, and they're gonna give it to you, but it's gonna be a lower amount. It's not going to be that high limit, but that's good. That's okay because now you're building that relationship. Now that you got that, you keep managing that well, then you come back and you get an increase. Manage that well and you get an increase. But we'll get into it. But that's all it is. That's how you get them high limits. Managing approved credit lines to maximize future funding. Getting approved is the beginning, not the end. How you manage your credit lines directly determines your ability to access more and larger funding in the future. Keep revolving credit utilization below 30% across all accounts to protect your credit score. And ideally, keep it below 10% for maximum score benefit. Making all payments on time or early as payment history is a signal largest factor in the both personal and business credit scores. Periodically request credit limit increase from existing creditors at 6 months of on-time payments. Many issuers will increase your limit without a hard inquiry, which improves your utilization ratio automatically. Create a credit cycle plan. Use credit for business operations. Generate revenue with those resources and repay the balance. And use the new available credit again. This demonstrates responsible activity usage that encourages lenders to offer higher limits and better terms. Document your credit growth as part of your overall business financial story, which strengthens every future funding application. So make sure you're managing your approved credit responsibly. Low utilization on time payments and strategic limit increase requests. That's what builds your credit profile and unlocks true high limit funding. You know what I'm saying? That's when you saucing them up and you get into the high limit. You gotta take baby steps with them. Take it, flip it, give them theirs back, and take that profit. And you just rinse and repeat that. You know what I'm saying? And they gonna see that you doing good, they gonna front you more. You know? That's all that's gonna happen. They gonna front you. So make sure you understand that. Like, share, subscribe, rewind this if you need to. You know what I'm saying? Cause this is for y'all. You know what I'm saying? Uh get that credit up. That credit is key. That credit is freedom. You can get my book off Amazon, Kindle, Barnes and Noble, pretty much all over. It's called The Credit Repair Playbook by Rodney Lawson. In there, I'm dropping gems on how you repair your credit, and it ain't no long 300-page book. This book probably 20 pages. Cause I'm straight to the facts and I'm dropping it to you step by step what you need to do to clean up your personal credit. Once you clean up your personal credit, you start building that credit back up, and then you can get to that business side. Once you get that business side well and done and established, now you can access this high limit funding. So it's all hand in hand, and I'm gonna help you get there. I'm gonna help you get there, and I brought my score up. I never had a 400, but I brought my score up from a low 5. I had perfect credit, messed it up, dropped to a 5. Now I'm back up to good credit. I'm at like 17. And we still working on it. Cause we trying to get to the 850. But it's gonna take time and applying these methods. You know what I'm saying? Right now, I'm in the position to go ahead and apply for these business credits and personal guarantee it now that I got back right on my personal side. But I'm still taking baby steps, procrastinating. But y'all don't do like I'm doing, cause I'm a family man, and I'm working hard every day. I'm barely having time to myself, so I'm not trying to take that money without no plan. I'm not even running my business like that. So it's not gonna make sense for me to go grab 50,000, 100,000, and I don't got no plan to flip it or pay it back. But make sure y'all got a plan and y'all know what y'all doing. You know what I'm saying? I am Rodney Lordston, and this is Chasing Wisdom Podcast. I'm gonna see y'all on the next one. Make sure y'all like, share, subscribe. Go get my book. Follow me on Instagram at King Row Banks. I'm gonna make some more socials. I'm on YouTube at what's my YouTube? I'm gonna make another one, but I'm on YouTube at Wealthy Walkthrough. The Wealthy Walkthrough. The Wealthy Walkthrough. You know what I'm saying? I'm gonna get all this in order, you know what I'm saying? But yeah, those are my socials. Make sure y'all like, share, subscribe, and I'm gonna see y'all on the next video. Chasing Wisdom Podcast.
This is Chasing Wisdom. Real life, real money, real faith. I came up with a prayer and a plan. Kept my name on the line. This is Chasing Wisdom.
Real life,
Real money.
real faith.
I've been counting every step. Now I'm pressing through the noise. Hands up when the truth hit. I was built for this choice. This is Chasing Wisdom.
Real life,
Real money, real faith. Fade it out, then cut it clean. Chasing wisdom.